Hi guys, how you doing? Happy Monday. Yes it is again, and I'm back. Okay, do you guys remember about 2 segments ago I mentioned to you that I was going to try to bring a mortgage broker on, and we need to discuss something that I don't know a whole lot about, but I know the value of dealing with a broker as I was on the insurance part of it. So it's with great pleasure that I got this man here, John Parker, who is the owner operator, and he has a team of place of TUDOR Mortgages. John has offices in West Vancouver, in Vancouver, and on Vancouver Island. He's been in business at 26 years now, John?
That's right, yes.
26 years. And so rather than, like I say, I try to stick to the things that I know about and have opinions about, but I'm going to bring this man out. John, there is so much happening in our market right now.
Yes.
And I'm sure it's affecting everybody some way, somehow.
Oh, you're right on that one.
So you know what? John, tell us about the changes.
Well, since 2017, there have been a number of changes initiated by the federal government through the Office of Superintendent of Financial Institutions to make it more difficult for people to qualify for mortgages from federally regulated mortgage lenders. That can be your major banks, that can be near banks such as companies like First National Financial, MCAP, CMLS. There are a number of good non-bank lenders. Street Capital is another one. These types of firms are all regulated federally, and as a result are having to institute what's called a stress test. Now, the stress test initially was for high ratio mortgages, whereby qualifications had to be done on at an interest rate which is currently 5.14%, even though rates being offered are significantly less than that. At the same time, the government also reduced the amortization available from 35 years, 1.40 to 35 to 30, and then this latest round of changes, it's now a 25-year maximum for insured mortgages. Now, an insured mortgage is a mortgage primarily where a down payment is less than 20% of the value of the property, purchase price or value, and that will incur the need for insurance from either CMHC, Genworth, or Canada Guarantee. 3 different insurance options for an individual to provide default insurance to the lender to enable them to lend more than the 80% limit that they would do otherwise. So that was the first round, which affected your first-time home buyer, people with smaller down payments. And then most recently at the end of this year, they instituted a second round of changes which are aimed at what we call traditionally conventional mortgages, which are people with larger down payments. So those changes were primarily the institution of a stress test for them as well, whereby individuals must qualify based on taxable income at a rate 2% above the rate being available to them from those institutions. So in effect, what that did was that has reduced the ability for individuals, even with large down payments, to borrow as much money as they had before. So what we're seeing is twofold. Number one is we're seeing that people are qualifying for less money. We're also seeing that people are being forced to go to non-regulated institutions. So there's been a shift, for instance, to credit unions, which are provincially regulated. There's been a shift towards private lenders, mortgage investment companies, that type of thing, because of an inability to be able to qualify under these new rules.
So, okay, so John, so when I'm hearing this, you are a mortgage broker.
Yes.
So to me, so now I'm thinking it's a huge advantage for me to come to you rather than go to my bank, who I've been dealing with for 30 odd years, because my bank's not going to shop the market for me.
That's right.
So you essentially, if somebody comes to you and say, look, I think I'm just on that fine line, I'm not sure, I'd want to come to you because you've got more options out there to possibly put something in place for me.
Absolutely. No question about that. So what happens is when we speak with an individual, we figure out what's best for them. So when I started Tudor Mortgage, I wrote down day one, what's best for the client is best for us. And so that is a mission statement that we abide by, and is very important to us to make sure that every client is treated as well as they can be. My second rule is I will never represent a lender unless I was prepared to borrow money from them personally if I was in the circumstance of the borrower. I find when I look at those two things, it helps me to be able to explain to people why, how, what's best for them so that they're looked after properly.
Okay, so now just a quick question. We're going to do 2 segments, but one quick question
Sure.
that I have is, have you found, just even with these new changes, is it affecting a lot of people out there?
Yeah, it's affecting people in numerous ways. The self-employed market, for instance, what we're seeing is individuals, there were a number of self-employed products that were available for people who did not traditionally show income levels commensurate with what's needed to qualify for a mortgage, but that there was cash flow and there were reasons that could be logical to be able to, for that individual to be able to afford larger mortgages. Those are going away as we speak. So most of it is gone, and the few programs that are left are being curtailed as well by the B20 rules, which is the formal way of the federal government. So that's the first thing. So what we're seeing in that particular case is a push whereby individuals self-employed are now in the future going to have to claim more personal income, leaving less in their corporations, for instance, in order to qualify for mortgage debt. So if I was a conspiracy theorist, what I would think would be is one of the purposes that may not be stated by the federal government is that what they're doing is forcing the self-employed individual to claim more interest on taxes, on their tax returns, in order to increase their taxes and provide a larger tax base for the federal government. That's if I was a conspiracy theorist. But what we're seeing is that's one. I'll give an example that I think can illustrate it. If we have Dr. A and Dr. B, Dr. A has a corporation, a medical corporation, and it makes $1 million a year. He takes $100,000 out to live on and leaves money, pays his salaries and all of his costs, and leaves money in the corporation and is able to invest in that corporation and do different things. Dr. B makes $1 million but takes $950,000 out and lives a very opulent lifestyle. Because of the new rules, what's being said is if it's not on a personal tax return, it's not income when deemed for qualifying purposes. Dr. A, who could be in a much, and probably is in a much better financial position because he has net worth behind him in terms of retained earnings in the corporation, investments, etc., can't borrow nearly as much as Dr. B, who's leveraged everything to the hilt. So that's one example of how these things are distorting, and that's been an ongoing issue that I've been professing for many, many years, but it's even become more with the new institution of the stress test. As well, we'll see individuals who traditionally looked at equity-oriented mortgages. There was a case whereby at one point in time, if you were putting 50% down, or you had 50% equity or 40% equity, it was relatively straightforward to be able to get an equity mortgage from a major lending institution. Very safe. You're putting $1 up for $1 from them, and therefore it's a very safe investment. With all of the new rules and the need for things to qualify, that has been curtailed as well. So we're seeing that the ability for people to be able to leverage, I can give an example on that, was we had a lady who had a very beautiful home in West Vancouver, wanted to downsize. She had no mortgage on her West Vancouver home. She wanted to purchase a smaller condo unit, but had yet to sell her home, had lots and lots of assets, but had very low income because she was on pension and she didn't have an awful lot of personal income. And of course, with the prices in West Vancouver, she needed to borrow a large sum of money to purchase that condo. She was denied by her bank, even though she had been dealing with them for about 30 years. Now, I can tell you, it's not that the bank wanted to deny her. That wasn't the issue. It's just that with the new rules, she was a square peg in a round hole. So we were able to look after her and get her looked after. But the fact of the matter is, she paid more than she should have had to pay in order to get that deal done, because she had to go to a non-regulated lender in order to be able to get sufficient funds to do with what she wanted to do.
So I have a question.
Yeah.
And so technically, with all these rules and everything that they've put in place, and
Yes.
please correct me, a lot of these were put in place because of our housing issues and foreign buyers, but technically it's affecting us more than maybe a foreign buyer.
Like many things, it's difficult to have one set of policies that will apply to all housing markets in a country as vast as Canada. So we have an issue in Vancouver of affordability, no question about that. Toronto has an issue of affordability as well. But other areas are lower cost areas. They're having the same rules being done. The issue becomes one of, in lower priced areas, it may not affect those people as much as it does the Vancouver market. What we're seeing is, for instance, up until this point in time, one of the rules became you can't get an insured mortgage on a property valued over $1 million on a purchase. There was a time you could even do a refinance. That's not available anymore. So there's no ability to be able to extract equity from an existing property on an assured basis. And if you're buying a property over $1 million, regardless of how much money you make, how good your credit is, it's not eligible for high ratio financing. So yes, it's affecting us greatly because the average price in Vancouver is way over $1 million. So yes, there are dramatic effects happening.
Wow, that's really scary. Listen, you guys, we're going to, we want to talk more about condos. We're going to do another quick clip after this one. But just want to also let you guys know that John and his team in the offices they're in also deal, of course, with commercial. You do
some commercial, yes.
And of course, you heard the story about the lady in West Vancouver. So I've always known, because I used to be an insurance broker, that brokers can be a little bit more creative. And if not creative, at least they have the ability to shop the market. So if you're looking for a mortgage, or you want some help, or you're really stuck and you want to do something, please don't hesitate to call John or get in touch with one of your team members. And do come back and listen to what John's going to tell us and share with us what he knows, how the banks or credit union may look at you purchasing a condo. Okay, guys, thank you, John.
Thanks, lady.